is Malaman Yasu Takorishi Sinn Féin. I move the amendment placed on the order paper by Sinn Féin that we firmly reject the Government's decision to appeal the European Commission's that Ireland provided unlawful legal state aid to Apple. The decision by the European Commission to find that this state has unlawfully given Apple an advantage over every other business, big or small, in this state over the course of decades was for many a shock. For people familiar with this area of Irish tax, it came as no shock. In fact, it sounded right because it is right. We know it's right because Apple told the US Senate that it was right. The company itself told the Senate that since the early 1990s, the Government of Ireland had calculated Apple's taxable profits in such a way as to produce an effective tax rate in the low single digits. Their head of tax operations, Mr. Philip Bullock, told the US Senate hearings in sworn testimony in 2013 in response to questioning from Senator Levin that the income earned by ASI and AEO had been subject to tax in accordance with the agreement that we have with Ireland. At its core, we have an issue where the Revenue Commissioners, acting on behalf of the state, sat down with Apple and arranged a deal involving the shifting of profits to a company they knew to be a fiction, a company with no physical presence or staff or no ability to generate the profits, all to avoid the payment of taxes. The Commission has stated that revenues rulings first made in 1991 and replaced by a similar ruling in 2007 ran contrary to standard tax rules applicable to other businesses. Clear indications towards favourable treatment for Apple can be seen in the letter the Commission sent to the Irish Government, advising of its view that the tax rulings with Apple constituted state aid. It is noted in that letter that at a meeting between an Apple tax agent and the revenue official in 1991, where the profits of the accounts were outlined to the revenue official. However, these figures from the accounts were not taken as the base point from which to begin a debate on how much tax the branch should pay. Instead, the revenue was willing to discuss and negotiate the computation involving a profit figure for the Irish branch based on a percentage of the actual costs attributable to the Irish branch, which clearly shows revenue not starting discussions on taxation at the standard starting point, which was the accounts, to a way of addressing the issue more favourable to Apple. As we all know, businesses normally pay taxes on their profit, not on notional figures. The Commission have stated that the agreement between revenue and the Apple did not correspond to economic reality, with almost all profits which were generated and recorded by the two companies in Ireland being internally attributed to a head office which existed only on paper and couldn't have generated such profits, essentially sending €104 billion of profits earned between 2003 and 2014 away from Cork and into a sort of untaxed Bermuda Triangle. In 2014, the advantage conferred was an effective tax rate of 0.005%. That's €50 taxes in every €1 million of profits. And I can't call you, that is the very definition of state aid, favouring one company over the others with special treatment. And the Commissioners has looked at 1,000 tax rulings right across in every member state across Europe and hundreds from Ireland. And they asked the Irish Revenue and the Department to provide information to show that it wasn't selective, and they failed to do so. It convinced the Commission over 3 years. One of the tests of state aid is that it costs the state. And we must remember that this was not a cost-neutral exercise. Over the 10-year period, there was €13 billion of unpaid taxes that were due to the state, that should have been collected by the state, at a time when Micheál Martin's party was in government, at a time when they were cutting the blind pension, at a time when they reduced the minimum wage, at the time when they were closing hospital beds. This tax was being avoided and was not being paid to Ireland. The Commission's assertion is that the Irish tax branches of ASI and AOE, which were both tax resident in Ireland, generated the profits referred to. It was these branches which not only dealt with the sales of Apple products in Ireland, but also the organisation of the manufacturing and distribution and sale of all Apple products outside of the Americas right throughout the world, which means that all iPhones, all iPads and all other Apple products sold outside the Americas can be linked back to two Irish incorporated companies where their profits were recorded. Under this agreement, yearly payments were made to Apple in the US to fund research and development efforts conducted on behalf of the Irish companies in the US. They shared the risks and they owned the economic rights to the intellectual properties. This issue is certainly not news to all concerned, as it came to the fore internationally in May 2013, when the US Senate Permanent Subcommittee on Investigations conducted a hearing into the offshore strategies of Apple Inc., and details of the favourable tax treatment was also disclosed by Apple's Head of Tax Operations, Mr Philip Bullock, who told the US Senate hearings in 2013, in response to questions from Senator Levin, that income earned by ASI and AEO had been subject to tax in accordance with the agreement that we have with Ireland. He further confirmed during questioning that this agreement with Ireland restricted their corporation tax rate to a maximum of approximately 2%. This evidence, sworn evidence by the Head of Tax Operations and indeed by Mr Cook himself, the CEO of Apple, would clearly indicate that the tax Irish rulings provided to Apple enabled Apple to pay substantially less tax than other companies, which is illegal under EU state aid rules. And this has been coming down the rails for many time. And it is embarrassing for us that it is the Commission who had to carry out this investigation, that the Commission had to make this ruling, and that we here in this Parliament failed to carry out the necessary investigations ourselves. Those of us who have tried to raise this issue have been physically shouted down by people who are now ministers for the mere mention of the word Apple. When at my suggestion the Finance Committee set up a subcommittee to look at the issue, Fine Gael, Fianna Fáil, Labour and indeed Stephen Donnelly circled the wagon so that no executive from Apple or any other multinational companies would be invited in before the committee. The fear of even discussing this issue was so crippling that questions weren't even allowed to be asked. When I argued that the state closed down the double Irish, a scheme that has been there for many years, overseen by Micheál Martin and his party for many years, I was told that by at least 3 times by Minister Noonan that it was not Ireland's problem. Eventually, of course, it was ended, although with a generous phasing-out period. When I first raised the issue of stateless companies exploiting Ireland to avoid tax, I was treated like a nuisance. I was told I was causing the country reputational damage. Well, it's our problem now. It was only after I drafted legislation to remove the practice of facilitating stateless companies that the government acted. So for too long, Concordia, this state has had its head in the sand when it comes to the global moves towards tax transparency and fairness. And this is our money. The Commission has ruled in it. And I would like to deal briefly with the clear attempts at misinformation being thrown out there that this €13 billion in back tax is some type of magic money that is not ours. The €13 billion relates to €104 billion of profits generated by the Irish branches of Irish incorporated companies ASI and AOE on sales outside of the Americas between 2004 and 2013. And to date, that has not been taxed anywhere in the world. And this line about we can't be the tax collector of the whole world, it doesn't mean anything. If the profits are generated here and booked here, they should be taxed here. That is how it works. Let's now look at the strawman arguments that Fine Gael and Fianna Fáil have trotted out in a single voice. Every excuse under the sun has been invoked to deflect our responsibility. We are told that the EU Commission has overreached, that this is a political power grab by Brussels. Since the 70s, the Commission have been enforcing state aid law. In 2003, for example, as Fintan O'Toole repeatedly points out, it ruled that Ireland's so-called foreign income scheme was illegal state aid. One would think, listening to Fine Gael and Fianna Fáil, that the EU Commission using state aid rules to look at taxation issues was an unprecedented event. Far from it. Only 2 months ago, the Minister for Finance listed 3 taxation measures announced within the last couple of years alone that are still awaiting state aid approval. They are stamp duty changes, relief on stamp duty for farmers and tax relief for succession planning for farmers are all being inspected by Brussels. No angry pitchfork marches and no passionate defences of sovereignty have ensued, though. The Minister, and indeed those in the opposition who support the Minister, will know that his flagship Living City initiative was delayed and amended significantly before getting EU state aid approval. Eventually, after years, it was brought in with significant changes. The EU has been using state aid to look at tax measures for as long as the state aid rules existed. The ministers and others here have experience of state aid and how it works. They are trying to mix up that this is some new attempt to undermine sovereignty, and it is a dishonest assertion by them. It is a cynical lie to suggest that there is any new threat to our corporation tax rate in last week's move. It is a lie, and those who are peddling it know it only too well. The other cobbled-together argument is that this is an attack on small nations. Well, let's look at that. In 2014, Germany was found to have given state aid to Nürburgring racetrack and ordered to recoup a state aid of €1.27 billion, the highest state aid ruling since bar the Apple ruling. The biggest state aid ruling prior to this case, and it happened only 2 years ago, to the biggest country of them all. And for the record, the Commissioner who made this ruling, supported by Phil Hogan and others, is from Denmark, a country with the same population, the same size as our own. All this talk about the freedom of small nations is as ridiculous as it was 100 years ago. Then we have the scaremongering about jobs, and we heard it again today from Deputy Martin. It may come to news to him that following the EU announcement, Apple made a statement committing itself to Ireland and pledging ongoing investment. And I warmly welcome that. And why wouldn't they? After all, the loophole that allowed this deal to operate has been closed for some time. This is an issue of the past. It is a legacy issue. The loophole has been closed, and all evidence points to more investment by Apple and more taxes being paid by Apple, and both of those are to be welcomed. But don't take my word for it about that this won't affect jobs or corporations coming and locating here. The rating agencies Fitch has said that Ireland's low corporate tax rate and its high human development and governance indicators should keep the business environment attractive to multinationals, and the cost of relocating would be large. It also went on to say that the windfall would reduce our debt, and they are, of course, right. There is no economic reasons to turn our noses up at this Commission's ruling that we are entitled to the €13 billion in tax backs and about €6 billion in interest that is owed to us. The other red herring is the argument that the EU is wrong to apply this ruling retrospectively. Now, this is just nonsense. All state aid investigations and rulings are retrospective. That's how they work. They can't look into the future. They have to look into the past. And that is complete nonsense that's been peddled by these two parties, which obviously had a couple of focus groups and decided what type of lines is best to put out to muddy this issue. Ask any businessman or any businesswoman who has been audited of the powers of the revenue to act retrospectively. Of course it can be applied retrospectively. Look at what the IRS is doing to Coca-Cola, looking for $3.3 billion in retrospective taxes, despite the fact that the IRS gave them a clean bill of health a number of years ago. All these deflections, all these red herrings show that Fine Gael and Fianna Fáil just don't get it. This is not about the Commission overreaching. It's not about some sort of attack on the rights of small nations. It's not about jealousy, and there is no threat to our jobs. But what there is clear evidence that Apple got a special tax treatment by this state over decades. Last Tuesday, the EU sent a mighty shock through the Irish establishment. By doing so, they have unwittingly unleashed the most unlikely patriots, who remarkably had hidden their passion for Irish sovereignty throughout their entire careers. Not even when the Troika strolled into Dublin, dictating brutal cuts to our social system and public services, did these brave Irish patriots show their true colours. When the ECB told us not to burn the bondholders and instead make the Irish people pay, they kept their nerve, waiting for their moment to strike. When the EU Commission said they must charge the Irish people for water, they cunningly went along with it. When the IMF demanded that young teachers and nurses made pay for the events of events before their time, they waited still. Some thought they were just quislings. It turns out they were just very, very deep undercover. Now, finally, their day has come. The secret patriots of Fine Gael, of Fianna Fáil and of Labour, like the men and women of 1916, having resolutely waited for the right moment to reveal themselves, have emerged to strike a blow for Irish sovereignty. Perhaps Ken Corley the Proclamation needs a new verse about the rights of one multinational to be treated better than the rights of everybody else in this so-called republic of ours. But their years of careful preparation have been wasted. Their patriotic fervour wasted on an issue that isn't about sovereignty. It is about fairness. It is about tax justice. And there has been immense damage caused to Ireland's reputation because of this affair. And no appeal is going to repair that. The only people who will benefit from an appeal are the lawyers. They stand to gain millions, while the Irish people stand to lose billions. Minister Noonan, in one of his first interviews after the decision, dismissed the idea that there was a moral case to be answered. Well, there certainly is. For almost 20 years, the revenue officials were aware that a company which, as we know now, generated over €100 billion in profit over the last decade alone, had no tax residency anywhere in the world. But nothing was done about it. Questions need to be asked how this was brought to the attention, or if it was brought to the attention, of the political authorities, who in the normal course of events would have closed down this loophole. How did it happen? How did the Revenue Commissioners not notify the politicians, or did they? And what did the politicians say if they were notified? In the case of a stateless company, a blind eye was turned to it for over 2 years. There's nobody in this chamber today that will stand up and say that what was happening, where Apple could book €100 billion of profits without paying tax anywhere in the world, was right. Yeah, but many people in this chamber actually served in government that overseen that system for over 2 decades. And I want to know if they knew that this was happening, because it could have been easily closed down, as it was in 2003 when we found out that this was happening. Of course, we need to see the full EU ruling, or at least as much as is possible, as soon as possible. It's been suggested, as we heard earlier, that we could be waiting months, and that isn't simply acceptable. And I'm asking the Government to give a clear indication when we will see the decision, including the advanced opinions that we're giving to Apple. We need to know where the political responsibility lies for cutting these deals that have cost the Irish people far more than even the £13 billion we might hopefully get back. If the Commission was not limited by the statute of limitations, they could have come up with a much larger figure. We need to know why the Revenue Commissioners would feel empowered to sit down and make a deal with a company that limited its effective tax rate. I reiterate that the scale and cost of this deal to the Irish people is so big that a public inquiry is required. Nobody that supports Ireland's right to set its own tax rates, or a right to compete to win foreign direct investment, should have any issue in supporting my amendment tonight. It rejects the idea that it's in the Irish people's interest to appeal this ruling. How could it possibly be? Only this week, we have heard of hospitals turning away patients in need of brain surgery, of the massive requirements investment in our education system, of Exchequer returns not matching targets. €13 billion plus interest is the amount of money owed to us. It's not a gift, it's not a penalty, it's simply what is owed in unpaid taxes. Some political parties and other commentators can try to justify saying no to that €13 billion, can try to justify spending millions of euros to make sure we don't get it, but my party cannot. We know the reality in our hospitals, in our schools, in our communities. Fundamentally, this is about equal treatment to all the players in the economy. We all know constituents, small businessmen and businesswomen, who have been chased by revenue, sometimes into liquidation for as little as €3,000, yet €13 billion is not worth chasing, it seems. We recognise that Apple are free to appeal and will appeal. So those who argue that we need legal clarity, it will come. But we do not need to pay lawyers millions of the people's money to do so. It is time to move on and to stop fighting yesterday's battles. In the year of 2016, let's drop the mock patriotism and focus on playing a part in what is hopefully a more transparent, fair and prosperous international tax system. This country is crying out for investment and for good employers. We can have both. The idea before us in the Government's motion is ultimately we want to be able to break the rules for some of our friends. Well, that's not good enough. The same motions that saying that it will fight tooth and nail to make sure that not one red cent of this money owed to the Irish people will be returned to us. Cancorlia tax is not just for the small man. It is for the big companies, it is for the small companies, it's for the workers, it's for the farmers, it's even for the politicians. So nobody can argue that this deal is justified knowing what we know. Finally, can I just say, Minister, I welcome the decision that you took yesterday in relation to the Section 110 companies and the loophole. We'll examine the legislation that has been published in draft form and we'll comment on it when we have a further examination. But let me be clear, because I've been raising this issue for you since March of this year. This doesn't deal with the major vehicle that is being used by international players to buy up property in this state. Let's hear what Davies say in their advertisement. They say the vehicle of choice for private investors who are taking large-scale investments in real estate is known as qualified investors' alternative investment funds. And you know, and I know, that anybody who invests in those funds, international investors, doesn't pay a penny of tax in this country. Let's look at some examples. Property giant Kennedy Wilson Europe holds €1 billion in property in Ireland, €26 million of rental income in the first 6 months, not a penny paid in tax in the state, and your legislation won't change that. Let's look at Cedar Real Estate, another qualified investor alternative investment fund, being paid €2.3 million every year by the central bank to rent their property, doesn't pay a penny tax here because they're a qualified investor alternative investment fund. Let's look at what Dennis O'Brien did with his ICAVs, where he was able to reduce his tax liability to the loss of €10 million to the Irish Exchequer using an ICAV. Will not change under your legislation. And let's look at the non-Irish investors in iPut, who have a €30 million in profits last year, will not pay a penny tax on their property-related profits because of this qualified investor alternative investment fund, which holds assets of over €300 billion. These loopholes, along with what you announced yesterday, need to be closed down in this year's finance bill.